Nancy, what did you make of all the extreme moves in the market this week? And did you take any opportunity to buy?
We bought a little bit, but well, actually, early in the week, early end of last week, we were actually doing tax loss harvesting for a number of our clients, and then we picked away at a few names earlier this week, but nothing, nothing of any great magnitude. I do think Mike is right. It is difficult to have a sense of what's going to drive this thing going forward. We have a cushion now. Some of the damage has been undone, but no one's going to be in there buying on, Friday or even necessarily Wednesday until we get a sense of, where things are moving from the China trade talk standpoint. I did think the PMIs were very positive. I know we were a point lower than we were last month, but well ahead of consensus. And so that was encouraging to me.
Chicago's
and I think
this numbers today.
Chicago PMI, thank you. Yeah, it's high correlation to the GDP number and to the the national PMIs. So I think that's good news. I think the consumer's in good shape despite the pullback in confidence. So I'm actually modestly encouraged, but I don't know if we've hit the bottom yet.
Nancy, we've blown out some records this week, most of which hadn't happened since 2008. It's got lots of comparisons and discussions going, but you've seen some similarities to a different past year, 1990.
I do, Wilf. I mean, it's so interesting to me. We had two major rallies in 1990 and a big sell-off in the third quarter when Iraq invaded Kuwait. We ended the year down low single digits, very similar in tenor. And we had come off of a pretty strong bull market period from 1984 to 1989. Market was up about 168%. We recalibrated in 90, and then we took off another 450%. Now, it's not a perfect analogy, but for those of us who have been at this, longer than the last correction, this feels like an economy that can expand if a number of things continue to go right. And I think we're hearing some temperance out of the Fed, which will be good. If we get some movement on China, that will be helpful. And earnings deceleration, I think, is already priced into the market.
Just quickly, Mike, I asked you about fundamentals before. Nancy said we're starting to get some moderation, or at least indications that the Fed is going to be a little more contained when it comes to talking about hiking rates next year. That's consensus. We priced
the market's decided to believe that.
Correct. Yes. Also, we have had some positive tea leaves on China and U.S. trade. China allowing U.S. rice imports, maybe a goodwill gesture ahead of the trade talks. Also, putting out there today that it's looking at public comments for a new investor protection law for foreign investment that gets at a lot of the U.S. criticisms and would satisfy, I think, the administration. So are things heading in the right direction for this market?
I think to the extent you can make a judgment on that, sure, slightly in the right direction. What's more important to me, though, than exactly what news we're going to get on those fronts is the fact that when the market comes down 15%, the stakes are lower. Right? So you don't need incrementally great news to have the market do okay the way you did when the market was at its highs. And oh no, what's going to propel us higher? We have to get immediate peace on the trade front, and we have to have the Fed not be a headwind anymore. Right now, in theory, risk comes out of stocks when the market goes down 15%.
The top rice producing countries are in the world?
Not the U.S.
China, India, Indonesia, Bangladesh, Vietnam, Thailand. Do you think they're going to buy rice all the way from America?
I mean, we must produce some rice.
Well, sure, but I think it's a gesture.
Maybe brown rice, maybe polished rice. Well, it depends what kind of rice.
Yeah, I'm not an expert.
We trade rice futures here.
Rough rice.
Yes,
anyway.
I get your point.
By the way, the 1990 analogy that Nancy is going with, you also had a peak to trough decline of just shy of 20%. So there was this kind of mini bear market. Nobody even knows if to call it a bear market. And that's what we had, at least so far. If the lows hold, you had 19 point something%.
We'll see if history repeats itself.